Yo, yo. Good morning, everybody. Morning, Oki, Will, Igor, Ross, Martin, Luke, what's up? Good to see you all in here. Usual people. You can like the video, I appreciate it. I think I need to get a better camera. We'll see. Morning, Harris. Jafar, what's up? Money, Giuliano, Talk Systems, what's up? How's everybody doing? Good? I'm going to share the screen here in just a second. If you guys can like the video, I really would appreciate it. I really want to get this up so then we can start the stream here. I'm going to start in a second. We're already running late. We're running late. It's all right. Try to get this to hello. So my OBS just does not want to help me. I'm trying to load in here, it just doesn't want to. Well, for some reason I cannot get this darn thing to get me to where I'm trying to go here. I know you guys can see me now, but I can't get OBS to click on TradingView's up, but it just will not click on it. I don't know why it's been doing this. If you are looking at Nasdaq, we had NFP that dropped, obviously on the release of that. I really can't explain it if I can't open the damn menu here. If I just add a different one, I don't know. I might have to switch it back to this and give me a second. Try my best here. Alright, let me know, can you guys see the screen in a second here? I don't know what's going on with OBS, it's very strange. It's good now? Yeah. I don't know, it's just will not click on like trading view. It's really weird. I'd add another one. I hope you guys are good. I hope we had a good day off. Wednesday was, I think this whole week's been difficult. I mean, at least for me, even. Wednesday was a really difficult day. I mean, I'm happy I didn't do anything else with it that day after the live stream, but it still wasn't a very easy day. There's something I do want to talk about ICT, and I'm looking on YouTube. He posted something new, which is it says SMC opening range. He taught a new concept that really, it's not entirely new. If you're a older student, you probably know about central bank dealing ranges, which work on Forex. But he introduced them into futures, which he's never introduced before. And it's really just taking midnight open to, well, midnight time to about 12:30. You can extend that range out and use it as projections for the high or low of the day. I would like to go over that. Remind me to do that. I don't want to do it right now. But I have had a few questions over people thinking about it, so I just want to go over it and clarify it. I think it's pretty easy. What I would like to look at and observe today is how we've dropped initially on NFP. And on NFP, it's usually a two-stage delivery majority of the time, meaning NFP has its delivery first, and then the open usually delivers an opposite way, typically. So if I had a bias and looking at what we're doing on the particular time of day, it is what? It's Friday. So that would be TJF, which means there is a likelihood of price retracing back into the weekly range by 20 to 30%. So since what have we done this week? We've expanded lower, right? Basically only been one-sided, expanded lower. So what would that mean? Price may want to expand backwards, which means bullish, into the range by 20 to 30%. Since we know with NFP it's usually a two-stage delivery, at least through experience, we've dropped lower, took out sell-side liquidity. In here, I want you all to annotate what we're doing. We've dropped down right off the initial opening bell into what? A discounted inefficiency here. So inside of that discounted inefficiency, you also have this down close candle, which would be your bullish order block as well. You also have this, if you're just reading order flow, you're reading onside. This is your down close candle, which is your bullish order block here. We drop into that, plus a inversion for value gap, which is here. So what you're reading is, what is price respecting? And can it continue to respect our onside order flow? If we had to, thank you, if the RTH gap is also above us, which it is, that's also a great confluence. We have the opening range gap or the RTH gap, which is resting above us currently. And that's another good confluence if we had to build a bias. If we were to build something as far as higher prices, again, think about the things that I'm saying right now. I'm adding up a recipe, right? When you go into the kitchen, whatever it may be, you're designing a recipe for an outcome. And in here, that's what I'm doing. I'm building up a recipe or a certain amount of ingredients for a framework to a trade. And the less ingredients that I have, the less confluences I have, well, the less probability that I may be. I'm looking at not just a model. A model alone is just a model alone. But if you have frameworks, you have things there that help you understand why that model should work, the more the merrier, right? So having an opening range gap above you is another good confluence. Does that mean automatically, everything I'm talking about here, does that automatically mean that it's going to work? No. But these are things, when people talk about models and what model should I trade and how should I trade, well, a model alone is just a model alone. But if you don't have a framework, you don't have certain times, you don't have anything else to help you with that model, then to me, it's just a model. It's just a skeleton that may or may not work. You don't really know why it worked. You just say, oh, well, that model worked. That fair value gap worked. That 2022 model worked. The breaker worked. Whatever it may be. We don't really understand the logic behind it. So all of these things are very, very important. And I think with NFP today, we may see that. ICT advises people not to trade NFP. I do advise to study it. As a newer student, I probably wouldn't trade it. I'd probably just chill out and let it do its thing. So hopefully that's a good explanation. Hopefully you understand what's going through my head. If you look at the 5-minute chart, I'd just like to see if we can start to see an expansion. If I had to target something, if I had to look at something, well, I'd be looking at the opening range gap in general to target something. Meaning, since the opening range gap is above me, I could at least target inside of the previous dealing range, since that's resting in there. So from this dealing range high to low, I could at least target probably optimal trade entry. So right around 25%, maybe 50% of the opening range gap. Now, in my mind, I'm actually looking at potentially today of a different framework of where we could head up towards these relative equal highs, depending. We could just absolutely do nothing, or we may just drop lower. I have to see really evidence towards it. And the reason that I would be hesitant towards really trying to long it right off the open right away is because, well, when you look at the daily time frame, again, what is the daily time frame? The daily time frame is your parent, right? Will, yes, I'm going to have to view that because I just saw it. I think he released it last night. Yeah, this dude just doesn't stop, man. I mean, what are we going to stop here with the concepts, dude? I love you, ICT. You're amazing. But we got to stop. We got to just chill out here because I've learned your concepts for 5 years. It just doesn't stop, dude. Now I got to learn something new again. I'm kidding. But back to the point. The daily time frame. Sell side imbalance again. What have we been looking at? If you go back to the weekly forecast, go back to Monday, go back to Tuesday, blah, blah, blah. We've talked about how we should seek lower prices. We should seek this low down here. So if price is truly wanting to seek this low down here, then expecting a retracement or expecting even a rally towards that buy side, it may be unlikely. It may not want to do that. So you have to be careful of that. Anytime you're really trying to fight the narrative, which I was trying to do that on, I think, Monday or Tuesday, it just didn't work out too well, right? Because when you're trying to fight that or you're trying to counter it, you're going to get ran over. So we'll see if today, if we end up really, expanding towards this low in here. To make note, if you're newer, I mean, it is NFP today, and it has been NFP week, which is a lot more difficult at times. It can be a hell of a lot more difficult. And we're rolling off of you could just say a bank holiday. I don't really know what the hell yesterday really was. But, yeah, that's, anytime you're rolling off a holiday, the volume or delivery can be a little bit weird too. Has to do with the size of the gap and what do you expect on that? Yeah. Let me know if this is too quiet currently, because I like this right. I like this out of my way. Yesterday was a bank holiday in the U.S. Yeah, because Jimmy Carter died, so I believe they're doing like a ceremony or something. I'm not particularly sure. That was a new one. To be honest, it was before my time. I was not alive. Yeah, former president. If you guys just joined the stream, please like the video. I really, really appreciate it. We're at 153 viewers, we're only at 35. The sweep at 9:30 1 minute time frame is a Judas swing as we're expanding lower. Well, a Judas swing means that you're taking out opposite liquidity, right? You're taking out an opposite side of liquidity. That's a false move, technically, right? If I had to say something was a Judas swing, I mean, I would like to see Nasdaq get underneath this low and then rally higher. You have internal sweeps, you have external sweeps. So an internal sweep on liquidity, video is lagging, dude. Which video? My camera or the actual video? I see it says poor, so I'm gonna chill out on it. I mean, mine says YouTube is not receiving enough video, so I kind of believe it. It's just YouTube. YouTube's very, very difficult to work with, man. I never had these issues within Discord. YouTube is just a shitty streaming platform. I mean, on my end it says poor condition or poor status. I mean, I don't know. As long as I see his chat still rolling, so probably fine. So internal sweep on liquidity would be this low being ran, right? Why is that an internal sweep? Well, from this dealing range low, it's a high there. That's internal sell side. And then we're sweeping internally that sell side in there. So let's just say price goes higher. I'm just making a hypothetical. I'm not saying it is. If price was to go higher, you get above this sell side imbalance, you treat it as an inversion and it expands higher. And it never sweeps that low down there, never takes that low. That's an internal sell side liquidity raid. If it ran this low, meaning it took out the low and then ran higher, that's an external run on sell side. So preferably you want to see external runs. I mean, especially when you're looking at the higher time frame, we're very close in proximity to this low down here at 20,983. And we may want to rally towards that today. That may be in the cards. So I'll just keep watching that. But I'm unsure currently. So in these situations, I just let time do the work. I'd rather just wait for probably a little bit more time, more information. I could be selling short in here, but I don't really know that for a fact we're really going to rally lower. Viking, first time here. Good to see you here, brother. If you guys can like the video, I would appreciate it. I know some of you are. We're at 57. The more likes, the more it gets out into the recommended YouTube algorithm. People see it. Chase, good to see you. Have you watched ICT's lecture about midnight open? Yeah, I'm gonna go over that. What kind of trader are you? That's a difficult question, I think, to answer. I mean, I have a wide variety. I know what you're asking because I'm assuming you're a little bit newer to the concepts. I can trade every single PD array. I can trade every single thing that's known by ICT, but I only trade the inefficiencies. I really only trade fair value gaps. I'm glad to have you here. David, good to see you. Thank you, Will. So what is this down close candle here? Is that a mitigation or is that a breaker? Good. Mitigation. And why is that? Because this high here never went above that high. This here, these series of down close candles is your breaker. So there's a little bit different formation. It looks like we took out that low. We'll see if we want to rally towards 20,983. Man, you, long time no see. Good to see you. Do I know you from Danny's Discord, if I remember? I mean, that was probably years ago. But yeah, probably. I've been in a lot of Discords throughout all this. So what I'm going to try to determine is the reason I haven't really executed on anything, because I'm not particularly confident or sure. I mean, we're getting to the point where I'm seeing more evidence. And two, I'm really waiting for time, which we're now just getting into the macro, which is kind of like it is a rule I really want to incorporate this year, is really waiting for at least this macro to start engaging with price. There's times where I can operate right off the open, or at least the first 20 minutes, but there's a great deal of uncertainty sometimes with it. Still says the stream status is poor. Leo is there? Now that is a good chat member. I didn't know that. It's good. Do you hear the music, or is this muted? I think it's muted. Should be, yeah. I just remember that. Yeah, so we'll wait for the news event driver at 10 o'clock. Something like that where you're releasing, especially after NFP, I'd be waiting for the news event driver to come out. So wait for that to come out. At least that's what I'm going to be doing. Then we'll go from there. You're not going to miss anything. I promise your life is not going to end. We're at 171 concurrent viewers. If you're just tuning in, I appreciate it if you like the video. Welcome if you're new. Do you consider S&T between YM and ES and NQ? I only consider ES and NQ. I do not consider YM. YM is like a, it's like a stepsister or stepbrother. They're just kind of like a, we don't really pay attention to them. Yeah, I'm looking at it. We'll see. With the news event driver, I'm just gonna wait and see what we get out of it. You'll hear me say it a lot, like there's an S&T here, but sometimes I do forget to say it. If you ever see me looking to my right, that is my S&T monitor. Then I have my main monitor in front of me. Then I have another one stacked on it where my camera's at. Then I have YouTube and all the comments open over there. Eddie? Yeah, I don't know. That was just the first thing that popped in my head. I mean, probably not, no. I mean, maybe. I'm not going to hate against it. Can you please explain SMT? I have an SMT video on my page. It's called, it's in my beginner videos. It's like SMT for beginners. It's on my page, so if you would like to learn it, I have the most simplest, I think, explanation of it. What is your entry model? I don't like that question. It's not you, Leo. I understand these are questions that I had probably in the beginning. I'm gonna say my multiplier, my entry pattern is a fair value gap, but I have a lot of different models. I have a lot of different things that I work with, so it's hard to encapsulate or explain. Like you would have, I can't explain it in one sentence. You would have to sit with me for a while to say, okay, well, this is what he's looking for. These are the things that he does look for. There's a lot. I know, on Twitter, people try to make these concepts to seem easy. I don't think they are easy, and I don't think that you can explain it in one sentence. I don't think you can do it in one beginner video. I know even ICT at times states that you should, try to make the simplest, easiest model and stick with it, which yes, in the beginning years I did that, which I just stuck with one model and stuck with it. But as you progress, I mean, these things are very, very advanced and very, very intricate. I mean, this is something that there's a whole lot to it. There's a whole lot, man. I mean, I use something probably different every day. It depends on the condition. I mean, I have the same repeating things that I do every day that you'll see me do and look for. But it's not a one-trick pony. I mean, with these concepts, it's like getting your doctor's degree. It's not easy, man. They're very, very advanced. That's not isn't saying to brag. I'm just saying when if you're looking for that, it's not going to happen. You have to be willing to put in a lot of time and effort into this. It's not to scare anybody away from the concepts. It's just to state that I don't think they're as easy as what everybody else, sits there and makes it easy, out to be. They're not that easy, man. They're very, very advanced. And it takes a lot of time to understand all the different models, all the different things that you utilize. If you had to simplify it, choose one thing that you like that catches your eye, whether that's a breaker, inefficiency, order block, mitigation, but whatever it may be, whatever you see, right, to enter into the market, stick with that and just solely tunnel vision everything else out of it, as far as when you enter into the market. Yeah, Will. Like, that's a good, simple explanation that I could make. Like, run on liquidity, displacement away, fair value gap, retrace on the fair value gap, entry there. That's a very easy explanation, but we all know, and I know you guys know, Will, that stated that. That is like, if you were to explain that to somebody, you'd be like, oh, well, that's super easy. And you could probably show it on a chart very easily, but we all know that's not as easy as it may seem. There's so much to it as far as disqualifying setups, qualifying the setup, why that should happen, when should it happen. There's so much to it that, I know as a newer student, these are answers I was always looking for, to be honest with you. Like, I always knew it was never not that simple. Like, yes, I understand that there is simple forms of it, but it's never not that simple, man. It's not. So, don't get me on a tangent about it. My best recommendation, that's the reason why I see his mentorship was a year when I was with him privately, is because you have to sit with somebody, especially like him, for a whole year. I've sat with him, not just one year, I've sat with him for multiple years, sitting right beside him every single day with his live streams, every single day watching his videos and learning what it is that he looks for. I would give yourself at least 2 years before your studying is over with, and then give yourself another 2 years of applying. Like, you have to look at this, like, people want to make this into like a year thing. Even dude, I'm a hard fucking worker. I will outwork anybody, and this has taken me 6+ years. I mean, I'm now going on 7 years of like really actually understanding this. So I'm just being realistic, man. Some people may pick it up quicker than I did. I mean, I had a little bit different journey. I learned retail concepts for about a year or two before I stumbled upon him. So may be able to cut it down to about 4 or 5. But I'm a realist, man. I'm not going to sell you a fucking dream, man. This is the hardest thing you're ever going to do. You're going to want to quit so many fucking times. You're going to want to pull your hair out. I mean, yeah. And this is not just a me. I've been alongside so many traders that, I mean, this has taken them just as long to comprehend this shit. It's not a one-trick pony. It cannot just come overnight. It just doesn't, man. You have to put in the fucking work every single day, week after week, month after month, year after year, over and over and over again, man. So, and Danny, I mean, good to see you here, brother. You know just as well as I do, this is not something that just comes easy, man. It's not. Danny's another fellow charter member, amazing fucking dude, amazing trader. So, this is not just coming from my mouth. This is, other people that have worked their ass off. Your biggest hurdle is going to be yourself. I mean, you can know all the technical stuff is pretty easy. Our news event drivers releasing. Technical stuff is honestly easier, I would say, than solving yourself. Yourself is a damn puzzle, dude. Look for 20,983, so that's going to be the news event driver. Will probably release into that. Paper trader, how many times do I feel like giving up? It's a good question. I don't think I ever felt like giving up. Was I extremely frustrated and pissed off and, upset? Yes, but I've made the decision in my mind I will never give up on this. Whether I was going to make it or not, I was never going to give up on it. Never. Even if, even if 70 years old and I never made it profitable, I would never give up on it. I have to conquer this, which I have for the most part. I mean, I still stumble at times and, fuck up. 20,983. We delivered into that, so we'll see where we head from there. This is where I'd reel out to higher time frames. As soon as you reach like a terminus, you reach a destination, that we've been looking at since basically Sunday. That's what we have to look at. Where else would price want to go? How many breaks were taken? I've never taken more than like a week off of this, to be honest, for me. I want you all to go back into the weekly forecast and see what I was stating about this weekly time frame and how we've delivered, because it's basically been perfect. Even the daily time frame, it's been perfect. It's a beautiful example of narrative. Higher time frame narrative, following suit of that. It's beautiful. Absolutely beautiful. So we've taken this low. This is why TGF is something that it's not a it's not a concrete concept. You can't just go into a Friday and say, well, it's TGF. I'm going to look for that 20 to 30% retracement. Sometimes it ends off the week expanding rather than retracing. So you have to look for evidence of that. Businessman, how many trades a week do you average? Compared to last year, I average way more now. I'm willing to take a lot more chances, and I think as my skill set has grown, even last year from, let's say this time last year when I was live streaming, I've grown a lot, and I'm comfortable with even taking, let's just say, more losses. Like, I'm comfortable with that because I know if my skill set's getting better and better, and it got a lot better from last year, I'm willing to go back in the market because I know I could. It's going to sound greedy. I know I can make it back if I needed to. And not all times and all days. Like you saw Wednesday. There's just profiles that you're just unable to do so. We'll just see what the rest of the day delivers like. We've rejected off of this bearish order block here. IOFED, this is an efficiency, and then we expanded lower. Let's take a look at, you want to take a look at ES as well. It looks like we got underneath Thursday, January 2nd low as well. If we were really going to expand today at 20,776, 20,740, those are some lows underneath price that I'm looking at. So these down here, we've taken out this low here, and we took out that low. Anytime you make a new dealing range low, so we've gotten underneath this previous dealing range low, that can allow price to move back inside of a previous dealing range and back inside of its premium. So we have to see if this is going to be willing to continuously keep dropping lower and expanding and spooling towards these liquidity pools down here, or whether or not we're going to have some type of retracement since we've taken out this low that's here. So that's something to observe. So when you're looking at something like this, this is what I would call a continuation model. You just have a simple inefficiency that's resting inside of a premium on a 1 minute. Now, that's a model, but the framework behind it would need more to it. Right, because since I've already taken out a liquidity pool here, that's pretty major, I now would have to be on the side of saying, look, it's going to keep expanding. We're going to keep moving lower. And that's something I just have to kind of determine real time with probably looking at ES, looking at a couple other confluences to kind of determine that. Different time frames, 5 minute, 15 minute, if those print inefficiencies, that's a good signal. Order blocks are a good signal for continuation on really large range days. So there's a lot of different things to it. My back is killing me. Ugh. Where the hell is my phone? Yeah, I don't know why my webcam's like that. I may have to fix that. Ooh. Focus. I don't know. I'll have to figure out the camera another day. Or we just get a better one, I guess. Zahid, bro. Bro. Zahid? Yeah, that's a very real comment. That's right. I didn't make shit for like probably 4 years, dude. I didn't make shit. Probably about up until 5 years I got my first payout. I didn't give a shit what anybody said to me. That's why I'm being real. Like, people sell this dream like this is super easy, and then people are like, well, I'm failing for years on end. Maybe I'm just like a failure. No, it's normal. It's completely normal. And don't look at my timeline. I mean, why should that scare you? Like, I've never looked at the timeline and, like, if I knew I was going to be successful one day. I knew I'd be successful. So what did it really matter? Yeah, even if it took you 10 years, what does it matter? Like, I think people get really obsessed over timelines and when they're going to make it. I've just stopped putting a timeline. And yes, each person is completely different. Everybody's going to be separate. Some people can make it within a year. You know, I'm not saying you can't, but you may be an exception to the rule. But from what I've seen, very few make it that quick. That's just being real. It's like asking somebody to be a surgical doctor or a brain surgeon within a year. I mean, it's just literally impossible. You can't learn that much and be that good at being a brain surgeon within a year, unless you're some type of phenomenon. I mean, it's just true. And even if you're sitting here looking at price and the way it's falling, like, I don't have as you gain experience, especially as you do work on psychology, I don't have emotions about this. Like, price is falling. Should I be with it? Should I not? I don't particularly give a shit. Either it's going to give me something today or it won't. And does it affect the outcome of my success? No. There's an abundant of opportunities. The JH, I always say that as well. I think it's a great example. Compared to college. I mean, plenty of people go to college for 4 or 5 years, 6 years, and they come out and they only make, they make terrible money. Your psychology is your number one thing. It's your number one thing that people overlook all the time, that they don't ever want to put a look into. And I even told it to a lot of people last year, even within my private group. And, picking up the book, The Mental Game of Trading, is one of the best books I've ever read. And it's taken years of even applying it to make it work. There's a really great quote that nobody is coming to save you from yourself. And that should scare you, because it's very true. And I know that very well myself. Nobody's going to save me from my own self doing the dumb shit that I don't want to do. And I've done it for many years of just doing dumb shit over and over and over again. And nobody's going to come save you from that. Nobody, your mom, your dad, your brother, your sister, your cousin, nobody, your best friend's never going to save you from doing the dumb shit on these charts. It's just you here. And that's the only thing that you're going to do. I would go farther than that, Zahid, and say it's 95% psychological. 95%. All of it's psychological. As far as technicals, I mean, you could be the best technical person in the world, but if you don't know when to sit still, if you don't know when to execute, if you don't know how to manage your risk, if you don't know how to do these things, then it doesn't matter what you know. It literally means nothing. So you have to emphasize that. I emphasized it a whole lot last year, and people loved it, and because it's true, it's real. 90% of these live streamers on YouTube that live stream ICT's concepts, they only talk about technical stuff. They don't. Keep my mouth shut. How old am I? I'm 25. I'll be 26 this year. I look 19. Hey. Yeah, Zaid, you're 18, brother. You got plenty of time, dude. Like, people tell me I got plenty of time. I'm 25. Mantis, good to see you in here. I've seen people start this when they're 40 years old, 50 years old. I've seen 60-year-olds start this. And I mean starting, and that's, starting at that age is probably a lot scarier than starting at a younger age, because you have a lot more to lose. Alex, hell yeah you do. 56 is still young. Dude, my dad's that age, and honestly, if you look at it 20 years from 56, you're 76. I mean, it's 20 years that's basically living my whole life over. That's crazy. Ross, that's amazing. See, all the younger people, and even myself, that stress about time and stress about making, I mean, look at all these older gentlemen in here and women that are doing this. I mean, it's a great inspiration. It's called The Mental Game of Trading by Jared Tindler. So we'll see in here, since we've expanded lower all morning, whether or not this gives a retracement and whether or not we get this retracement into, like, let's say this 5-minute inefficiency. So you could be on the side of where you'd be looking to long this into that premium and possibly looking at the idea of, if this goes inside of this premium, we could get this expansion lower again away from it. Now, I'm going to state this clearly. It could have a retracement into it, or we could completely outright reverse it and keep heading higher. Why? Because we've already have taken this low here, and on the hourly chart, we've had no major retracements. I'm going to throw another option out there. It could never even have this lower time frame retracement. It could just keep selling off, right? It could just keep selling off because it's in a very fast-paced spooling, basically, order flow. So we're going to take a look at it and see what we can find in here. If you're just tuning in or if you're enjoying the stream, if you can like the video, I would appreciate it. Thank you, Will. I'm gonna have to upgrade you to mod. So from that dealing range high to low, equilibrium is sitting right here. So we could be on the idea that we could long it into that premium before it sells off again. And that's what I may do. And in here you can see that there's no 1-minute inefficiencies forming. So that's where I'm going down into like a seconds chart. I'm looking and I'm spotting and I'm reading in here. Well, price shifted above an old high, dropped into this order block, expanded higher, dropped into this down close candle, order block, expand higher, another order block, expand higher. And looks like we're going to take this high here. Hey CJ, you look different compared to last time. How's life been? Life's very, very good. Hopefully it's, I look different in a good way. Not a bad way. I don't know whether it means physically or trading wise. I'm going to put it in on this order block here, on a 30-second, 45-second chart, and I want to see if we can see this expansion higher out of here. I didn't have the webcam last year, no. If you're wondering, here is what I'm looking at. This 15-second here. No, he's just saying my style of trading, which makes sense. I mean, I've had a whole year. I never stopped live streaming all last year. I had my private group, so I was live streaming. I live streamed every single day, basically last year. Like probably 300 days last year. So I've had a little bit more time. I only live streamed for 3 months and I went private, so I've had like 9 months of doing this privately where I've gotten a lot more comfortable doing it. So since we've got inside of this imbalance, I want to see how we treat it, but I'd like to see us at least get above equilibrium before I'm willing to collapse the position or pull off a partial, and at least get into this imbalance up here. So if you ever see me, like if I enter in on a 15-second, I may not have it up on the chart anymore. It's because it's on a different monitor. I don't like having it on this monitor. Again, all we're doing in here is we're just looking for the retracement for a potential expansion lower again. But if we start expanding really rapidly higher, then it depends on the delivery, then I may hold off on this. Meaning I may not take out right away. I may hold off higher. Why? Because again, we talked about this. We've taken out a dealing range low down here. So if we've taken that out down here, then price may really want a deeper retracement on a higher time frame. So these are things that are, again, when we talk about it like a simple model, we talk about when people ask that, it's so hard for me to like encapsulate, and I can't say, well, I trade this or that. There's so much to it, man. So in here, it would be a good place to take a partial. So I'm going to do that for the stream's sake, if that would let me do it. Thank you. If you're wondering, actually, my roommate is, he's got people visiting here, so I'm trading his account. And I'm just doing very low leverage. No, I'm not actually. I'm not trading his account. I'm trading my, I'm trading mine. Well, I shouldn't say that. I'm still waiting for my live account with, I got an email back. I'm very frustrated with Trade-of-8 right now. Because I moved about 2 months ago to Florida, so I don't have any new documents. All I really have is like my lease agreement. So I've sent them like 17 times my lease agreement, and they're still not accepting. So I may not get my actual live account from my funded until probably next week, I assume. It's been real pain in my ass, to be honest with you. So since we've got inside of this opposing sell side imbalance, and we are only longing it with the idea short term that this could be a retracement to potentially go lower again. Now, I also have the idea, depending on how price delivers, that this may completely shoot over this inefficiency, and it may rally even higher than what we're anticipating. So I'm going to start looking and observing if this would be the last point of interest really for me, is if we get into this inefficiency, we respect it, send it higher again, and send it through basically like the C of this inefficiency. And if we close above this inefficiency, then I'm holding out for even a longer target. Right? So hopefully I'm trying my best to explain this. I was doing my best before I took it to explain that. Where in Florida did you end up? Let's just say the West Coast. I'm not going to tell people where I live. Yeah, Nikki, and trust me, I've seen that here now, and I'm part of the problem. There's too many damn people here. And it's also snowbird season, which I think every 2 seconds I see an old person. But I moved here for my rights. That's why I moved here. I moved here for taxes and for my rights, and not to be in a very democratic state. From Cali, no, I moved from Chicago, so that was you're gonna be old one day. Yeah, I know. When you're young, you get to hate on the old people, and when you're old, you get to hate on the young people. So you're a Trump supporter? Yes. I mean, that's what we were dealt with this year. So. Politics don't matter. I'm not somebody that's going to bring up politics. I'm just explaining why I moved. I know people get super pressed about politics. Dave, I appreciate you. I love seeing the older gentlemen and even the women in here that are trading. It is inspiring as hell to me, dude. Because I don't think I would have the. If I'm older, I don't think I would take the chance or the risk to do it. So props to you. That's awesome. I'm trying to get my dad to do this, but he doesn't want to do it. So see what I was explaining here? If we start really rolling over this, I'm changing that to an inversion, and that means I'm really starting to expect a lot higher prices out of this. Tampa Tom, very good. Yeah, I spent a lot of, well, not in Chicago, I was outside of Chicago, like near Rockford, so you probably know. Members of body, really? Let's just say I live in the middle of that. It starts with an E. So I'm nearby. Thank you. So I'm still not completely sold just yet. I want to see this 1 minute get above this inefficiency, and then we'll see where it goes from there. All right, Nikki. I would grab something that I don't think I can show that on stream. Second Amendment. They're very friendly here. first one to okay. Probably. Dude, I could probably show outside. It's cold here, dude. It's so weird. And I'm a bitch. When it gets like 50 degrees, I'm saying it's cold. Mantis, yeah. Try not to do that. I heard that. Yeah, it's snowing in Texas too. This is where I'm on a 15-second. It's sometimes hard, I forget. I'm watching on a different monitor, but I'm watching this inefficiency in here. I'm watching how we respect it. Since we're in an opposing premium array in here, I want to see how we react. I would like to see a continuation, a drive higher, and a closure above the sell side imbalance to feel really confident to hold this. Otherwise, I collapse the position. I want you to do sleep blowing, so excuse me. This also goes back to the whole emphasis of like, you know, you're in Florida when you're when this whole move is dropping, all the emotions that you may have been having of like fear missing out and not being a part of the move, and maybe even self-criticism of saying like, well, you know, I should have known that, or maybe you had an idea price is going to go lower but you didn't execute on it. All of these emotions will eventually fade when you start trusting that there's an abundant amount of opportunities. There's an abundant amount of entries and things that we have in our arsenal through ICT. Now, people can get cocky with that idea and say, look, you know, since I know all this stuff and, you know, ICT is so good and we know all this stuff, I can just enter all the time. No, but it gives me confidence when price is moving and people, even in the chat, are like, you know, why aren't you a part of that move? All of that. I just stay calm and collected because I know that these things repeat, and I know that a move is almost always available. It almost always is. Like, for the most part, it always is. You know, some days, obviously, where price is just in a complete terrible profile, but if you're able to have that mindset, I think it'll help you a lot. If you're just able to stay calm and collected, you're going to be all right, man. Like, these moves happen all the time. Members of the body, I appreciate it. Do you pay attention to the flat top on the 10 a.m. candle? So what you're referring to, and I already probably know. So what you're referring to is power of 3, right? So what you're getting at is that this candle's had no power of 3 play out, meaning that when it opened, it immediately dropped lower, and it had power of 3 is manipulation, really. When you see it, price will open. It will open, set the high or the low of the candle, which is manipulation, and then expand. So what you're referring to is when you're not seeing that power 3 play out, basically what you're saying is like, well, you know, this candle's had no wick to the upside, so it could give the idea that it may want to roll back over and give that. Sometimes that happens where it just never it opens, immediately drops, or immediately rises. So to me, it's a good observation, but it's not, I guess, a solid framework or model, like just to take a trade, but it's good. Yeah, open, high, low, close, it's power of 3. SEMO, we had a day off last night. ICT told us not to trade AM session, let the algo work, and then trade the PM session. you know, I think through years of experience, it's not bad advice. I'm not saying it's bad advice at all. I mean, you shouldn't really be trading NFP when you're beginning. He states a lot of things as if he's talking to somebody who's brand new, man. Which, yeah, I probably wouldn't recommend if you're brand new trading NFP, especially after a holiday. But I think if you have experience, you know what you're doing, then that's okay. I don't have an issue with it. You have to just start listening to yourself. Listen to yourself through your journal and through your years of experience of seeing what's working for you and what's not working for you, man. I mean, if you see that through time and experience, the NFP is just not working for you, then don't trade it. You have to take what he says with a grain of salt at times and then listen to yourself and say, okay, well, this is what I've seen. I know this is what works for me. I'm going to trade this. And, as long as I protect my risk and I'm a good risk manager, then you're going to be all right. Like for me, I don't trade before news event drivers. Some people like trading before news event drivers. ICT trades before them, but that doesn't mean I do. It's just my personal rule that I know my personality. I know who I am and I know how I operate. So I tell it all the time, is you just have to listen to yourself. You have to. So once we take out this high, I'll probably be content with it. And I'll collapse it right there. Reason for that is we're going inside of this premium imbalance up here. We took out this high. Could I hold off for longer? Sure. But I'm content with that. That's a good amount of handles. It's a good amount of profit. I did a good job of taking a partial, took another one, and that'd be it. And we're also going into this reclaimed order block here. So from this dealing range high down to this low, equilibrium's here, and now we're getting inside of this premium, and inside of this premium order block. So I'd rather just pull the partial off or in the last position and be done. If I had more contracts, I may have, let one, ride or whatever it may be. But I'm content with that. I don't even know how many handles there really was. But it was from down here. About 130 handles or so. Yeah, I can explain the entry and all that. That way you guys have clarification on it. Just give me a second. If you're enjoying the stream, if you can like the video, about 200 of you guys in here. If we can get that to 150 likes, I'd appreciate it. But yeah, I'll do a short little recap. I don't want to harp on the trade, but let's just do it in a cliff note type thing here. What do we do on the news event driver? I'm sorry. Members body, I'll get to your question here in a second. I'm just going to explain this real quick. I'll get back to it. Since NFP and off of the open, we dropped lower, taking out a dealing range low. Meaning if you take out, and this is on any time frame, but especially a higher time frame, if you take out that dealing range low, that can give price the allowance to move back inside of its premium. Now, where would its premium be? Well, from this dealing range high, this is where the move started, down to its low, equilibrium sitting here. So that can give the allowance for price to move back inside of its premium. It doesn't have to if price is really moving fast-paced towards something. It doesn't have to have retracements. But that's what I was anticipating today. Because of a Friday, because of what we've reached into, I would be anticipating that. So that's a major thing there that we've taken out that low. That's the reason why I was taking that trade on lower time frames. When you look at all the way down here, so remember this big bold line here. Since we've dropped lower off the open and off of the news event driver, I'm expecting that retracement, and that's where I'm going into the framework of saying, okay, well, just to be on the side of caution, I'm just going to look at this dealing range, not the bigger one that I just outlined, but just this 1 minute, just this tiny little 1 minute from that dealing range high down to this low. I'm going to be looking at potentially returning into this premium and how we trade inside of that. Then I may hold it off longer to go inside of that bigger dealing range premium that I just mentioned. But that's the framework to start the model. And that's where I'm going into a 1 minute. I'm looking at it saying, okay, well, there's not a whole bunch of inefficiencies forming in here. So I'm in a seconds chart. And I'm at a seconds chart and I'm looking at the order flow. And I mentioned this in real time and I'm seeing how we're flipping from bullish to bearish. Where's the flip? Right here is the flip. Why right here? Because this is the change in state delivery, meaning you're getting above a down close candle, which creates an order block. So this right here is your change in state delivery. As soon as you close there, that's telling you the delivery is changing now from bearish into bullish. And we're anticipating a retracement, right? We're anticipating a retracement into a premium before a potential another sell-off. So you see it rise higher. We have a shift in market structure above this high here, right? That's your shift in market structure. Price comes back down into what? This down close candle is your bullish order block there. So that down close candle, yes, is your bullish order block on a 15-second chart. And I'm cutting it half right at the wick. That's where your mean threshold would be. Price expands away from it. What does it do? Closes above another old high, showing a shift in market structure there. What does it do again? Drops back down into this down close candle, or these two, which is your bullish order block. Expands higher, another shift in market structure. Goes back down into it, expand higher. Right in here is where I'm entering because it's dropping down into this big beefy down close candle, which is your bullish order block. And we're also getting above this sell side imbalance. So since we closed above it here, that's now inverting it and it's telling me really a change in state delivery as well. It's showing me that it's no longer respecting bearish PDRAs and it's expecting bullish delivery. So as soon as we drop into that, that's where I'm entering, and then we're reading order flow. Price expands away from that bullish order block. It creates what? Another bullish order block here. Take out the mean threshold, 50% of it, expands away from it. We have another down close candle. That's your bullish order block, expands away from it, and we just keep reading price higher and higher and higher. And that's where we're taking out partials. We're trading it up into that premium imbalance. We took it above that high. So hopefully that's a good explanation towards it. Again, this is where people ask about the models that I trade. I mean, that's not even an inefficiency. I mean, at times I guess I do lie. I guess it is a lie. I mean, I don't always trade inefficiencies. I don't always trade like a fair value gap. I guess I do trade an order block. Do I consider seconds charts necessarily? Yeah. I mean, that's why I trade the seconds charts, is because I see order flow. I see things that I can't see on a 1 minute. And I changed this during June of last year. And I started incorporating a seconds chart. They're very difficult to trade at the beginning, and I still think they're very difficult, but you have to be open-minded. But in here, if you look at the 1 minute where I was outlining that 15-second, there's nothing in there for me to really enter off of per se, right? There's no order blocks in 1 minute. There's no inefficiencies. But when I get into a 15-second chart or 30-second chart, the whole point is I never look at an entry model and say, well, I'm only entering because of that entry model. No. The whole framework I just discussed before I even looked at that order block is the reason why I'm looking to take that order block. I'm not looking at it saying, well, that's an order block, I'm going to trade it. No, I'm looking at it because of the framework, and that's why I'm trusting that to work. There's a difference, right? That's why models and people try to simplify them. It can't be that simple. The framework is the most important thing, and then you're able to get into your multiplier, then you're able to get into your model, and then you can trade it. Everything else is just noise. The framework is most important. If you can't sit here clearly and explain what I just explained, so this is why I'm taking this, then you can't be taking the trades. Then you're just entering blindly. Then you're just saying, why I entered off this order block, and you don't even know why the hell it worked. And trust me, I've done it for many years where I was just entering off of inefficiencies. I was entering off of order blocks. I'm like, oh, it worked because of the order block. Oh, it worked because of the fair value gap. No, there's a framework behind it that you're not digging deep enough to find out why that is working. Yeah, exactly. Well, the narrative that I outlined is my model. That's my entry model. That's why it's so difficult when people ask what is my model, because that will change all the time. There's different, the market gives you different environments every single day to work with and different profiles to work with. So it is difficult to explain at times. If I was in the seconds charts, I would have been able to capitalize on this trade with a better clean entry. Yeah, and I mean, I was 6 years into trading before I even looked at a seconds chart. So, I mean, take your time. You don't have to go into it. A 1 minute's fast enough. It does create a lot of problems out of seconds charts as well. It's not just all, rainbows and sunshines. But I'll sit with y'all for another about 13 minutes until we close out, and I'll be done for the week and move on to next week. This inefficiency here, see how we respected it. Now we're driving higher. If we close above this inefficiency here, that's going to become what? An inversion. Right, so where would you be aiming at? Well, you're looking at all the near side buy-side liquidity pools, which would be here. So that would be your high here. And you'd be aiming at that high here. Now, you're not just aiming at these highs just because they're buy-side, right? You're not just aiming at the highs just because they're buy-side. You're aiming at these particular points in reference because of this dealing range, right? You're aiming at it because of the idea that price wants to get back inside of this premium, right? It's trying to get inside of this higher time frame premium. So are these highs inside of a premium? Well, they're just resting right above it. So price is going to want to seek these highs and get back inside of that premium. That's where these highs are resting. It's not just targeting the buy side because it's buy side. Yes, is it targeting that? But it's inside of the premium. That's why it's going there. So if you look at even 4 hour, etc., price is trying to retrace, and potentially it may even get back up inside of these buy side liquidity pools up here next week. So CJ, is that breaker on the 1 minute what gives us a reaction? Also looking for higher prices. Breaker. 957. Yes, thank you. See, even some people see stuff that I'm not even seeing. So it's not the cleanest breaker in the world, but it is there. That is a breaker formation. So if you're wondering, I'm gonna have to make that a different color. It's a lot. You have a low. You have a high, you have a lower low. Now we have a higher high, prints right here. Technically, you want a bodily closure there. And that's a really good reaction. But price retraces down into that breaker and into that inefficiency. And that's where we see the expansion away from it. Right? Also in confluence, this is what I meant to say, is in confluence is if you have an opening range gap that's above you that's left open, what else is it trying to seek? Well, it's trying to seek this opening range gap. And where's the high resting? Right at the bottom. This high, this buy side liquidity pool is resting right at the bottom of that opening range gap. So it may want to seek that high, get back inside this inefficiency, and run into that opening range gap as well. Kaz, your advice, should I choose prop firm or live account? It's a good question. It just means to me, either if you have the money, and I'm going to state this with caution, if you got about 5 G's to your name that you have willingly able to spend, I would put that into your own live account. I'd work it. I can send you some spreadsheets of like what you can do with like 25, 50 handles a week, and what that turns out to be in a whole year. It's a lot of money. It's a shit ton of money. They do that over the course of 2, 3, 4 years. You're sitting pretty with your own live account. Now, if you don't want to take that risk, you don't have the capital, then go with a prop firm account. I did prop firm accounts, and I still have my whole goal with my prop firm was to move into a live account, which I was able to accomplish. 5K on. Go to a casino and just turn it into 10, then 20, and 40. you want to see this, really this inefficiency respected. So I know there's a lot on here. I'm gonna make this clear just so you can see it. So this retracement in here, I know some people may be freaking out, and it may be true, but this breaker plus that inefficiency should be really the last points of interest. And even the top end of that inversion should really be the last points of interest. If it starts failing, if it starts breaking through like we're kind of doing in here, then that may be showing you that it's no longer trying to reach into that premium that we were thinking about. And again, these are things you have to be able to switch right on the dime. Even though that was my idea of saying, okay, well, I think it's going to reach into that premium. If it starts failing and starts showing you that it doesn't want to do that, then you have to be able to say, okay, quick-minded, quick on the feet. Okay, it's not doing that anymore. It's showing me that the order flow is switching. Okay, I'm wrong. Boom, move. Or you pull partials, you collapse position. You have to think quick, right? You have to move. You can't just sit here and go, oh, what is it doing? How do I do it? You have to look at your last points of interest and order flow. If it starts disrespecting them, think fast, go, quick. You have to be able to do that. Otherwise, you're just going to sit there like a deer in headlights, and you're going to watch your money disappear, or you're going to watch your stop loss get hit. You can't just be married to an idea. Even though that was my idea, price could potentially trade to those highs. If it doesn't do that, if it starts failing, showing me the evidence it doesn't want to do it, then collapse position, dude, move on. Reanalyze it, rethink what it's trying to do. Okay, well, if I was to do that real time with you all right here, then I'm going to look at it and say, okay, well, if it's showing me evidence that it doesn't want to do that it doesn't want to climb into the highs that we had outlined, then what is it doing? Well, inside of this dealing range high to low, we got inside of that premium. It's the reason why I pulled off the position that I did. What is it doing? Well, retrace up into these two up close candles, which is your bearish order block. So it may now continue its bearish order flow lower, right? So it's retracing up into that right on time. What's the time right here? What did it do right on time? At 10:50, that's your macro. To what? 11:10, that's your macro in here. So the fact that I'm reading these lower time frames saying, well, it traded through the bullish breaker, it traded through the buy side imbalance. If it starts trading through this down close candle, that's showing you what? It's no longer respecting bullish PD rays. So now I have to start looking at it saying, well, the 1 minute order flow is starting to switch. So now I have to start building a bearish case and a bearish buy to say, well, why is it doing that? Well, then I'm looking at a 15-minute chart. I'm saying, well, we retraced on this 15-minute time frame premium, retraced on this bearish order block, and now we're reacting off of it. So that's why I'm starting to see this 1 minute starting to flip the order flow. You're hearing the inside thoughts of my brain. Like, this is why I like live stream, because it's everything that I think about, and you're going to think about as well. But within these concepts and within trading in and of itself, there's a lot of things that are happening, moving, parts, pieces, all the time. And you have to be willing to either switch it, try to understand why it's doing it. The biggest example and analogy I can give is being like a detective or somebody in a court case saying, look, this is my evidence for it. If the evidence starts to fall apart, you look for the other case, you start trying to build evidence for that. If there's nothing there's some days where there's just absolutely nothing and price is doing fuck all, and you just do absolutely nothing with it. So, yes, there's probably, bingo, thank you. This is your first presented FEG here as well. So that's from 936, 937 to 938, retraced in the first presented FEG there. And what is that inside of? Well, that's inside of your premium that we just talked about on your 15-minute chart, from that dealing range high down to this low. Optimal trade entry expands away from it. So what is this formation in here now? So since we got inside of that, these two down close candles would be your bearish breaker, which is here, right? That's your bearish breaker there. You have your inefficiency that's resting right here. Anytime you have a breaker, anticipate breakaway gaps. Right? So you have your bearish breaker, you have a high, a low, higher high, then you have a lower low. You have a sell side imbalance that's resting right at the bottom of that bearish breaker. Right? That bearish breaker, that sell side imbalance is resting right underneath that bearish breaker. So
this inefficiency that's above it, that's resting right there, and the one above that, you can anticipate those not to be traded to because of the bearish breaker, right? You also have your inversion for value gap here. This once was a buy side imbalance, extended to your right, that becomes an inversion. So you have three confluences there to tell you, okay, well, this shouldn't be traded to, this one shouldn't be traded to, and the most recent, newest inefficiency should be potentially respected. Y'all getting a whole lot today. Whole lot. I got 9 hours of sleep, so I'm feeling talkative. Eyes hurt. Now let's go into like a 15-second chart. What's a 15-second chart doing? Well, 15-second chart, what's these two up close candles, or at least the three of them? That's your consecutive. All of these are your bearish order block. What's inside of that little dealing range? A little inefficiency. Respecting it, and we're seeing a new low printed. 30-second probably gives you a little bit better view, but that up close candle is your bearish order block. And if you're wondering, I'm done for the session. I made my money, I made my handles. I don't need to go back into the market. I'm just reading order flow. If you have the discipline, I've gotten this question. I've never had a greed problem. That's not just ego. I generally never have. I'm very content. I've always been that way, and I'm thankful for that. You know, I've had a very massive tilting problem. So, you know, some people have dealt with different hands. Some people have a greed problem, but they don't have tilt. But as far as me, if I get my handles and I get my trade for the day, I'm done. I don't need to go back in the market. I can just observe price and read it because it's fun to me. Especially if it's good order flow. If it's boring, then I'm not going to waste my time. Fly, yes sir. Little by little. I mean, this is only about, what, 4 days in the live stream. We'll get back to 1,000. I know we will. Let's look at your 15-second in here. Inefficiency here should be potentially respected. Oh, yes, I can do the midnight lecture. Let us, we're about to end, so yes. Can you get that spreadsheet? Yeah. The only issue, I guess, with it is you kind of have to make your own template. So if I give it to you, then you kind of got to figure it out on Google's whatever. Let me see. How do I copy the link? Copy link. There you go. So he said, look how often it respects a 15-second. I'm going to convert a lot of you to this 15-second. Whole lot of opportunities on the seconds charts, man. There's a whole lot in here. It's just the order flow is better to read. I like reading it better than a 1 minute at times. So if you were to be trading it, let's say from that breaker that we had analyzed, right? The breaker with the inefficiency, the inversion. If I was to be trading that, where would I be aiming at? Where would I be taking partials? Well, from that dealing range low to that high, if I was to take the trade in here, equilibrium is sitting right there. So anything inside of this area would be a good place to either take partials, or if I really want to hold out for the whole position, I'm targeting this dealing range low down here. That's what I'm targeting. I'm targeting it down there. And the whole time, on that whole way down, I'm reading order flow, and I'm watching, and I'm seeing how price is respecting bearish PD arrays. Danny? Oh yeah, dude. I mean, I haven't been in public eyes, but I mean, this is probably June of last year I switched to seconds. It's definitely, I mean, you have to take it with a grain of salt. It's definitely, it can be a bitch and a half at times and screw you up. But combining both of them together, like a 1 minute and a 15-second, 30-second every so often, it's definitely a recipe that helped me be able to enter the market way more often. Yeah, the 1 minute seems like slow motion to me now. Seconds chart, it's good. Okay, I gotta do this midnight open thing because I know I have plenty of people asking about it. So if you're looking for anything else for the rest of the day, I mean, that's it for me. I just want to explain that real quick. It's over ICT's recent video, because I have plenty of people asking me about it for clarification. I think it's fairly simple, man. And I don't fully, you know, I have to do more work with it, but this is my understanding of it so far and what I've gotten out of the video, and I think it's good. I don't think it's an end-all be-all. I don't think it's something's going to change your entire trading career. This dotted line is midnight open. So, midnight open, New York local time to 12:30. Inside of this time zone, you want to be annotating the highest high and the lowest low within that range. So in here, this would be the highest high because that ended right at 12:30. If that was outside of it, then we wouldn't be annotating it. That's your highest high within it. Where's your lowest low? Your lowest low within that range is here. So your range is from this low all the way up to that high. That's your range for midnight open range. Now, how do we utilize this? We utilize this by seeing where the projected daily high or low is going to be. So if you take your fib and you run it from the top of that range down to the bottom like you would on a dealing range, right? Top of that range down to the bottom of it, you're going to start getting projections, right? So you're going to start seeing where price could potentially form a daily time frame, or really you're looking at the daily time frame to print the high or low. And this is where you have to start projecting. I mean, this is probably out -10 if I had to guess. Even further than that, it's probably -11. I wouldn't say today's try -13. Yeah, this is where, you know, a lot of people, this is the same thing as central bank dealing ranges, if you know what that is, on Forex. It's a good confluence, but you don't really know for a fact where the hell price is going to end up as far as standard deviations. It's a good concept, I like it, but it's just a confluence at the end of the day. And really, I don't want to make it further than that. It's a good confluence to have. Another step further within that is any first displacement or any first inefficiency that's formed within that range, and the first one that catches my eye is this one here. You can extend that out in time and almost act as if it's the first presented FEG, much like the 930 first presented. So you can extend that out in time, and you can run standard deviations off of it. So if you just did the same thing here, you can run standard deviations off of it. So it's a good little concept. Would I be using that? Probably not, no. So I just wanted to clarify that so people would understand what the hell it was if you had questions on it. Obviously watch the whole video. Don't try to cut corners here. Watch the damn video. And it's about an hour long. Put it on 2x if you need to. Yeah, I think that's going to be it for today. I hope you guys enjoyed it. Hopefully it was insightful. I mean, I dropped a shit ton of gems, a shit ton of knowledge, to be honest with you. So that's going to be it for today. Okay, no, that is for, I mean, it can be for a London session, but it can be for the entirety of the day. So I think it's going to be it for today. Hopefully you guys enjoyed. I will be back here next. Well, I'll actually be back here tomorrow for a psychology video that I'll probably be live streaming. That way, you guys can ask me questions. I'll be back here Sunday for the weekly forecast. So, have a good day, everybody. Enjoy your weekend. Peace out.